Hey everybody, how's it going? Wanted to make a video discussing how I use technical analysis to help make some decisions on when I want to buy stocks. I need to obviously make some big disclaimers. I'm not a trader. I'm not like a professional. I'm not a millionaire. I'm just a normal dude who likes to think, I guess, that I can make educated decisions related to the stock market based on technical analysis. None of the stocks we're going to be discussing in this video are recommendations. These are stocks that I am buying, possibly depending on which ones we talk about. But I have done the due diligence, I like to think at least, in finding the stocks and determining why they fit my portfolio and investing criteria. There's a lot more things that are involved with all this stuff, so just keep that in mind. But again, not a millionaire off of my decision makings, but maybe one day we'll see. Probably not. Anyway though, let's get into the actual video. Major disclaimer though, again, we're not teaching here, we're just whispering and chatting and providing relaxing discussion around a topic which would hopefully help us make better decisions in our investing. I want to start this conversation. Okay, so this isn't going to be like a super intro video. We've already discussed this multiple times, kind of how we use technical analysis, but I'm going to assume either people have not watched all those videos or maybe forgot. I even forget myself. But I think that I want to start this conversation looking at Apple. This is an example that I've recently, or what we're going to be discussing is a recent example of when I would start using technical analysis to help make a decision on if I want to buy more. I do own Google. I've already identified it as a stock that I like. And the hardest part, though, is finding the valuation and entry points. I don't intend on selling any of the shares that I purchased or am purchasing anytime soon. So there's also the time horizon element of this. So that's a big part of it. The time frames that we're looking at are going to be yearly time frames. And none of the decisions I'm going to be making involve selling, right? Or at least for this example. Just entry points at why I think they're decent entry points. A lot of what we're going to be discussing too, like we're looking at historical data in a sense. We can see like the brand new data coming out, on the price. But for the most part, we're using things that happened in the past to get an understanding on how the market reacted to the price of Google at that given price. And we're foreshadowing that into the future on how the market might react at those. There's also things like pattern recognition where this is a pattern right here. I want to definitely dive deep into that. But pattern recognition and price action around certain prices and how the market reacts and is important indicators on where possible entries, exits, and movements might go. Again, this isn't a science in a sense. It's based on probabilities and in a way like psychology. But I mean, there's a lot of bots and all the algorithmic trading as well. So there's a lot of factors that we have to keep in mind. Let's see, where do we want to go from here? Let's just get in with Google. So I started, let's see, can we, obviously, so no matter what, if this chart didn't exist and we knew Google's price today was 187, I think we can make some very reasonable assumptions right now. 150, 175, and $200 are psychological levels which we would expect the market to react. And the thing with this is this is just common knowledge. If when you go to the store and you buy something for $149.99, that's different than $150. That's why marketing targets things and advertises advisors sell things at $199.99 and not 200. It's the same thing with the market. If we go to this 200 levels of right here, this line is representing $200. We see certain price action around $200. Let's see if I can zoom in a little bit more. And this gives indications on how the market was reacting. And those who don't know specifically what these candlesticks mean, we'll break it down really basic. A green candle indicates that the price entered, or started the day, I should say, at this low body part. And it ended the day at the top of the body part. They call them whiskers, these little lines outside of the body of the candle. I guess this is a better example, maybe. At the start of this day, the price, these are 1 day candles. This piece of information represents a whole day of trading. On this day, the price started at $187. It went to, and then it ended at $193. These whiskers, these little lines, are where the price fluctuated in between that period of time. So what this basically says, and how I would read it, is the day started 187. It fluctuated somewhere between here, but we got it as low as 186.50 and as high as 194.20, let's say. But we ended at 193. The same, the inverse with the red candles. Red is we started at this upper part, this $196.80, and we ended at $190. However, throughout the day, we hit a high of 189.70 roughly, and a low of 189.13, 14, something like that. These pieces of data visualize what happened throughout the day and how the market reacted to the prices. Let's go. I want to show these candles because these are important right here. What these indicate is the day opened up at here. It opened at a certain price. We shot all the way up to $203, so people were buying this stock above $200, which again is a psychological level. Again, there's also a lot of algorithm tradings, and it's really hard to again put everything into like a box and analyze it. So it's going to be kind of hard to take everything into consideration. So we can only kind of, or at least I can only take things into consideration that I somewhat understand in a sense. So $200 I'm classifying as a significant price, which I expect a lot of sellers to enter the market and less buyers, just because again that price level has been reached. On this day, even the day before it went up to 200 and then it fell back. People weren't interested in buying at this $200 level. The next day we tried shooting above the $200, and not only did the price get rejected at that, and more sellers stepped in. The day closed lower than how it opened, which indicates a lack of interest in the buyers. Without seeing any of this other data, and if I only had, let's say this candle and everything here, we have a big up move. We hit this resistance point of a psychological level. I would say with a very high probability, the next few days our candle would go, or the price movement would go down to some level. I don't know exactly what the level would be, and even that decision is based on a probability. The next day this could shoot up, we don't know. But given the information that I received and am looking at, and I have to form a decision based on a probability, I would say with a higher probability, there's a higher probability that the price goes down, and we can see it actually did. Here we have 21 days later, the price goes up to retest this $200 level, and we see the same price action. We get rejected, and then we fall below the previous day's close. And then we get rejected down to a line. Then we try it again. What is this? 2 weeks later, 14 days. We try it again. It gets rejected. And then we try 2 more days in a row, kind of getting rejected. But we're building like this kind of momentum where the price action is pretty stagnant in this area. And then volume along price action is not indicative of, like, it's not, it doesn't paint the whole picture. Price action combined with volume shows how the price was moving and how many people were interacting at that price. In general, the more price, the more interactions and exchanges at a given price indicate a higher confidence in that price action or that candlestick that you're interpreting, and that kind of just makes sense. If I told you that there's one person that bought this one object for like $1,000 on one day, and then the next, or I guess we could use that example. If someone bought one product for $1,000, can you really say that? How confident would you be in that price? Whereas if I told you that 1 million people bought something for $5, you could say, okay, there's a market, there's a lot more exchanges going on. I feel more confident, or I would say I would feel more confident that that price is the actual value that's of that asset, let's say. So just the price action isn't just the whole picture here. But anyway, you get based on these three candles getting rejected here, and this is in a sense hindsight. Like, I have the information of what happened in this pattern, but using, I'm not gonna say common sense. Using like the data that we're seeing? Again, we can have a prediction on what's going to happen based on what has already happened. Without seeing this data here, and we have this data in all this, I can see, okay, I got rejected at 200. We have 3 days of rejection at 200. We attempted to pop above. Now, if I saw just that, I would say, okay, maybe we're looking good, and this could probably move up. But then you look at the volume and you say, okay, there wasn't that much interaction, there's not much interest, there's not much, I guess, explosiveness from the buyers or outweighing the sellers here. Whereas you can see that all these volumes, you can see more sell. When, again, in general, when there are red candles, it's going to correspond to these red volume bar, the bar charts, the volume bar charts. In general, you can say that for these days, the sellers outweighed the buyers. The sellers were controlling the market. Again, generally speaking, you probably have to do a lot more analysis or interpretation to get the fine-tuning, but to get a quick gauge on what's going on, I can say, okay, sellers outweigh the buyers here because the candle is red, and we showed this big also wick too. Given the information that I have, getting back to like a minute ago, I would say that this, with just looking at the price action, I would say we might go above. I think it's a higher chance. But when you look at the volume, that would probably tell me that, hey, I'm not confident this would shoot above. I think it probably goes down because of the sellers still being in control. Again, it could shoot above the next day. You don't know, but again, it's a probability. The next day, it does shoot down, and this candle's actually really bad. From like if you're long this stock, or you wanted to, I guess, trade it for in the positive direction, what this shows is we gapped. We started $20 or sorry $200. The night before, we opened at 194, so we were down already 3-4% on the day, just the beginning of the day. The market tried to bring the price back to 200. The sellers stepped in and pushed this all the way down, back to the previous day, or back from the close of that morning. That is with some pretty relatively high volume around the surrounding area. That is very, very bearish. That indicates like, wow, that's bad. That's going down. However, the next day we can see we actually had a pretty bullish candle where the buyers stepped in, not on very high volume, but they stepped in. One thing I wanted to, now that we kind of talked about this point to here, right? This point to here. This is a pattern that I try to identify resistance point, a psychological level of 200. We then fall to some level. We push back up. We kind of, we teeter-totter back and forth a little bit, but then we try it again. We try to shoot above the 200. No, we fall down again. However, we don't fall down past it. It actually just touches this, in a sense, but we don't touch this. So we see some pressure building in a sense. We then go back up. We try for that level. We get rejected, but we don't get rejected past this close or these closes. So again, we're building this ascending pattern. I guess it's more like an ascending support. So we have the stagnant resort. We have the stagnant resistance at $200, while a increasing support line. Sellers are interested up here, more buyers are interested here. There is a tug of war kind of going on, building this price. The buyers are not. The buyers here are kind of in a sense in control. We just had this big up move. There's a lot of hype. Possibly, it's one interpretation. But at some point, sellers are going to step in to start pushing the stock down, take their profits, But the buyers kept getting interested as the price falls. At some point, there has to be this breaking point. There doesn't have to be, but there's a probability. I think a high one too, based on. I guess I'll leave that out. I was gonna say based on historical data, but it depends how you interpret it. But that there's a consolidation of price in both directions, and eventually something's got to break. So that's the thought here. One thing that complicates this is this earnings call here, this pattern actually, I would say, broke out on this day, or this day, I guess officially this day, because we finally got above all these other wicks in this resistance, and actually broke above and closed even higher. The earnings call, this candle actually looks really bad. You do not want to see that type of wick after a breakout. You want to see strong buyers controlling the market and buying anything. And why you're going to see that is, again, kind of like FOMO. Once you see the price go up to 205, you're like, oh, I missed it. I didn't get it below 200. Now it's too late. Now I'm just going to buy it because I don't know where it's going to go, or I don't know the valuation. And again, that's one narrative, one point of view. People could debate that. But yeah, on earnings, actually, was this aftermarket? Yeah, aftermarket. This thing dropped 7% or something like that the next day. So that's earnings mess up patterns. They mess up price action a lot. So that if I have learned that if I'm not anticipating or factoring in the earnings, regardless of what happens after the fact, I probably get out of certain stocks before earnings. Again, depending on why I originally bought the stock, because they're just unpredictable. So this pattern, if earnings weren't here, I would think this thing would keep going up based on the price action. But earnings completely changed what happened here. But yeah, this is an ascending triangle pattern, and it starts with a big up move for some reason. And then a certain price action or price is reached where a lot of sellers are interested, and there's a rising price or a rising support from the buyers that's clearly shown. And then eventually it breaks out with high probability. No, with a higher probability than selling, because again, this initial up move is the key part. Now, what happens within this price action is key in determining if this also is a successful pattern or not, because there's plenty of times when it's not. I don't have every data on every ascending triangle pattern, but if I had to give this pattern a probability of going to the upside, I would say 51%. I know that sounds dumb, but that's just the honesty. But 51% chance I would give that based on this move up, this price action, it probably goes up. There's been the thing that initially concerned me when looking at this pattern was these wicks. They shoot above, then down, often down. Sometimes I'd rather have, or from what I've seen, when the wicks like kiss the resistance line, it makes for like a better pattern. But I don't know. What do I know? But we should probably get into how I actually use this to buy a stock. I forgot. That's kind of like the most important part. So like with Google, well, actually, let's see. Let's put my judgment to the test. Let's actually put the trades on. So I guess I reinitiated my position in Google. Yeah, I sold it over here for some reason. Actually, we made a good gain, but once they released that dividend, I was like, fine. I'm back in. It's a good company. So, okay, on a 5-year time frame, I identified this trend line as significant, where in November 2022, we started to build this like base, and then start seeing, okay, we're grinding on this line to the upward direction. It could break at any time. Don't get me wrong, it can. But at least this is a point of interest that I think is significant for some reason. And this is significant because of the interactions that happen on this line, and this arbitrary line that I think is important. Because of the price along it. Again, this is just something that I made. It may or may not be significant. I'm saying it's significant based on what I'm seeing. I thought the price was too high up here. So here to this line, maybe 15-20%, as we start to approach the line, I'm like, okay, I'll get back in. I bought some shares here because I saw we pulled back, but then we shot up a little bit, so I was thinking, we might not get to this line. So I'm like, okay, I'll buy some here. As we got on this line, start buying some more, we're not perfectly on the line, but nothing's ever perfect. I'm saying my risk reward is pretty good on this line. Like, I think if the price action hovers over here, it dips below. So as we approach the line, I want to be picking up some shares. Over here, for some reason, it shot up really far. I wasn't too interested in buying. I actually, when I started noticing this pattern at around like probably this day, because you can clearly see these two candles here, and you see it starting to rise. I was like, okay, I think that's an ascending triangle. I think we're probably going to shoot above. So I guess yesterday, last week, I was like, man, I really should be buying some here, but I don't know why I didn't. In hindsight, looking at the data, I probably would have. Because I'm not concerned with earnings. Because, I'm not holding this for 1 or 2 quarters or even like a year. I intend on holding this for a while. So how the stock performs during or right before earnings or after is not really, it's not too concerning to me. One thing too, when I was looking at this pattern, what was I seeing? Okay, we gotta take these off. There's a lot to talk about. So I'm trying to I'm trying to pick what I want. This also has like a reverse head and shoulders, which actually indicates it goes up. Here's a head, here's a shoulder, and it's like a reverse pattern. It's not perfect. I don't really love that pattern anyway, but I know someone's probably gonna mention it, so I just might as well point it out. I don't think it's that clear to see that type of pattern, at least in this data, but it does somewhat exist. I forgot why. Yeah, I thought, actually, we made a video last, I thought this was gonna actually break down here, and the reason I did was because of these candles right here. So we have earnings this day where we tried to shoot above, huge red, nobody was interested, on pretty heavy volume, even the next day, heavy volume. Few days, or like a week or 2 later, we have this massive, like, red candle. Massive with very heavy volume. I thought that was gonna be the break. It goes down, but you do see we do have like a wick here, which at least indicates that people were buying. But when even like here, you see these massive red. So we're seeing massive red candles with huge bodies. That kind of indicates that something's not good. I don't know what, but for some reason there's a lot of sellers and there's people that aren't interested in buying, especially when, why does it just keep happening? Especially when we're at this support, we're at this grind line that I deem significant in the 150 level. The fact that this happened here and then even this one is kind of surprising. If this didn't, so on a weekly candle, if we go weekly candle, go to that exact spot. This looks bad on a weekly candle. This week we just dropped and we passed this line that I thought was significant. However, the next week we now have buyers should be stepping in, I'm expecting, because we're at the 150 level and we're at this grind line. If this broke down here on a weekly time frame, then that this would probably drop. I mean, it doesn't have to, but the fact that there's opportunities of people looking to buy, I would think they would step in. And just to be clear too, I might have drawn this imaginary line, but I'm not the only person looking at this one. There's other people that are gonna take one of these three support areas of interest and connect these other data points and say, okay, we have some sort of trend of some slope that this stock's price action is interacting at, or buyers are stepping in and saying, no, this line is, this price based on the previous price is somewhat important. So even though it's imaginary, other people are probably looking at it. So I thought this was gonna go down here. Actually, I guess we have to put the trades back on. They keep hitting their own button. I mean, I'm not perfect either. I don't look at this every single day. Yeah, I thought this was a good buying opportunity. I thought for me, like the 153, but 157 also. I was a little early that day. Then ended up dropping. I should have bought in more though when it was like the 153, 152. Then it went above, and I thought, okay, that's kind of a good sign in a sense that we held here. We found buyers. Or the buyers started to step in, and then we kind of like stabilized. Same thing here, we kind of pushed above. I don't know why I bought a share here. I think I was just feeling it. And then we dropped down. As we got to this line, I was like, okay, I'll pick some up. Then we shot above. I decided to buy some today and the other day because, I mean, it dropped heavily off earnings. So I was like, okay, you know, the stock just dropped like 7%. I like the stock. So let's just pick up like another share while, because I don't know what the next day is going to bring. Next day, the market could be like, wait, what are we doing? And it could shoot right back up to like 200. This did fall out of the pattern though, so I do probably expect this to come down to this line or some other pattern. Sorry, some other like line over here, some trend line. I gotta use my words, not trend line, like price action around here. But I'm not mad at buying it up here. I'm definitely not, buying a lot of shares, but if we hit this trend line again, probably interested. If we go back to 150, which I mean would be a pretty big drop, I'd be pretty interested again. But based on this line, I think there's going to be a lot of buyers that step in right here. What else? There's a lot we can chat about. I kind of wanted to talk about some other stocks too, but I think deep diving into Google was not a bad idea because there's a lot to explore on this. So for like my decisions, I'm looking at where are people buying, where's the market stepping in and saying, okay, buyers, we want it at this price, and also the same thing with the sellers, where are they stepping in? Identifying those zones, I think, is important because if you know you're in a zone where people are, or if you're approaching a zone where people are going to start buying, and I want the stock, like I'm not worried about maybe like a 0.5% or 1% difference in price. I just want the stock where I think it's at a pretty good price. And obviously there's other metrics that you can use, like actual fundamental metrics like cash flow per share or price to earnings. But I mean, at the end of the day, people buy stocks because they just want them and there's a certain price. A lot of people don't even look at all this stuff. But I get worried with candles like these, with these big red bodies. with good volume, and also candles like these, because those indicate that prices got rejected and people are not interested in buying. I get even like this candle is not that good, but you get confirmation of certain prices when you see candles like this. I wish there's more volume, but this candle where there's a green, what is this called, like a shooting star or something like that, a big wick, and green. Given the cool, like, okay, and like massive candle, okay, really good, kind of confirming that this move is real on pretty good volume, but also this right here confirming that this is probably a good support zone. So even if I draw a line right here for some reason, 186, I don't know. Why is this important? We have two massive candles where people in the very near past were interested in buying and held that price and pushed it pretty far. And again, we have that a very relatively high volume, which indicates a lot of exchanges and transactions occurred. I would say probably with somewhat high probability this price might stay here. Given the bigger pattern though, this might go down to this trend line over time, but in the near term, if the price fluctuates around here, I wouldn't be surprised, because we have buyers, or we have seen buyers in the past who might also step in here. But given enough time, we'll probably eventually come down to this line again before going up. We don't have to, but we might. Yeah. Anyway, though, I think I'm gonna wrap this video up. That was a lot of talking. I don't even know what I said. But, yeah, again, I'm not an expert, but, I like to look at the data. I like to make decisions based on it, and I like to try and do my best with the money that I have. I do own Google stock. I am not trying to hype it up or anything. I'm just already explaining things that I'm already thinking about. I guess that's a good way to put it. Anyway, though, take care, everybody. We'll probably do this again, but see you in another video.